Ever wondered why business terms sound like an entirely different language? Well, it's time to decode this business jargon and understand the true essence of these phrases. Grab a cup of coffee, sit back, and let the enlightenment begin. First on our list is cash flow. It's the total amount of money being transferred into and out of a business. If more cash comes in than goes out, you have a positive cash flow. Next up is break-even point. This is the stage at which total revenues equal total costs. Simply put, it's when a business neither makes a profit nor incurs a loss. Then we have capital. This is the financial wealth, especially that used to start or maintain a business. It's the lifeline that keeps businesses alive and kicking. The fourth term is margins. Margins refer to the difference between the sales and the production costs. It helps businesses understand the profitability of their products or services. Now let's decode return on investment. This is a performance measure used to evaluate the efficiency of an investment. It's the ratio between net profit and cost of investment. The sixth term is operating expenses. These are the costs associated with running a business's core operations. It includes rent, equipment, inventory costs, marketing, payroll, insurance, and funds allocated for research and development. Moving on to overhead. This is an ongoing expense of operating a business. It's the costs that can't be directly linked to producing a product or service. Equity is our next term. It represents ownership in any asset after all debts associated with that asset are paid off. In a business, equity is the value of an entity's shares of stock. Then we have inventory. It's the term for the goods available for sale and raw materials used to produce goods sold. Net profit is the next term. It's the amount left over after deducting all costs of goods, operating expenses, and taxes from revenue. Our 11th term is accounts receivable. It's the money owed to a company by its debtors. Moving on to liquidity. It's the availability of liquid assets to a market or company. In simple terms, it's how easily an asset or security can be bought or sold without affecting the asset's price. Leverage is next. It's the use of borrowed money with the expectation that the profits made will be greater than the interest payable. Gross profit is our penultimate term. It's the profit a company makes after deducting the costs associated with making and selling its products. Finally, depreciation. It's the gradual decrease in the value of an asset over time. In summary, understanding business terms like cash flow, break-even point, capital, margins, return on investment, operating expenses, overhead, equity, inventory, net profit, accounts receivable, liquidity, leverage, gross profit, and depreciation can provide valuable insights into the health of a business. So the next time you hear these terms, nod knowingly and impress everyone with your newfound business acumen. Remember, knowledge is power, and with this power, you're better equipped to navigate the challenging world of business.